General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Today is a holiday. It's Memorial Day. But something cool about Memorial Day is they don't print a candle for Memorial Day. Or they put Monday, Tuesday candle together. And something I always like to do is put it in a box. I don't know, you probably seen me do it before on like an old episode. I don't know, because I took off all the episodes where I didn't have the disclaimer just in case. So you probably see it on some of the PDFs in the Telegram because they go all the way back to when I first started journaling online, because I was journaling before I started journaling online. Let's do Monday though. Let's knock out this work. But it's one thing I find is we always sweep both sides of it. So I like to get it and put it in the box and use that as my reference point to track the delivery for the week. That's my screen grabber. No, I don't even need this. Durable goods. What is this? 83010 and Waller. So some orange folder news. 830 news comes in. Medium impact. 10 and 10 as well. Not that much of nothing. Let's look at this CME Fed Watch. We did some tariff pauses. That's not pushing the agenda. I think tariff kick-ins could push the agenda because 50% is still like, and they're basically just kicking the can down the road. Extension here, extension here, extension here. It's really no, I can't say Trump is not a Band-Aid ripper because he ripped the Band-Aid on a lot of stuff. That's why they, all the shock headlines. It don't seem like he really ripping the Band-Aid, but the news will make it seem like it's the end of everything, 94% no change for June 18th. Yeah, so. But rip the Band-Aid off them tariffs. Go ahead and let them tariffs kick in. It ain't finna be the end of the world. Nothing top 10. NVIDIA is Wednesday, so that's a big deal for NASDAQ. Nothing for Tuesday. No, NVIDIA is Wednesday. It's good to have it on the watch list. Good to have it. Hold on the watch list. Dollar. What we got going on here? It's probably an inside day. Here. I do want this to come down here before long. This is Target. I don't know if I have a good emoji for Target. Let's take a look. Let's put finish line. Oh, snap. Let's make it bigger though. And put the coordinates. $97, 21, maybe a run above today's high, and then lower. Reference point would be this. This would be a good added spot. Give it the classic daily order block. Daily bearish order block. Put it on top. And add an alert. Yep, that's it. That's good enough alert. Retracements to the order block. I set up good sales to range low. I don't know why it Control Z. Retracements to OB will set up sell to range low. Today it wasn't that much today. So this is today's price action. Let me put it in here. Default. Can I scoot it? Perfect. Give me a midline as well. Let's make it solid. This is Monday's price action. Yeah, because they're going to take this candle off on a daily. I'll be able to see it on other time frames. Yeah, let's scoot it up to the 4 hour as well. And that kind of sets us up. Previous week's range, nice little gap up. I think that was the debt ceiling deal, as well as the EU pause on the tariffs. So it's like two factors that kind of played into it. Push-up day on holiday. Most action was overnight. Good news was EU tariff extension. to, I believe, July 9th. And government debt ceiling deal. Let's go to the weekly. Put this over here. Text on top. We started with this push up. I think previous week's high, previous week's low is going to really stand out this week. We already swept this. I don't think we need to go redo this, but this close above level does make sense to look for order blocks or resistance levels or whatever. We'll see the reaction around this open price here, previous week's open price, which I will annotate with this. This will work. Not even this. Let's do this. Watching previous week's open price to see if we get a reaction here. No, we already grab stops from the week before last. So any real push up can be price reaching higher if we close above, I would say, the previous week's stop hunt. Let's go here on the daily, which previous week's open price is here. This is Friday's high. I'm going to take this off. We closed above this candle, which is cool. This is the open price. We closed below this. This is the fractal we got here. Got us a nice little gap right here as well. So gapped up, pushed up, closed above Friday's high. This is the open price of last week. We haven't hit it yet. This here, failure swing liquidity right here. It's a nice fractal. I will watch this candle. Really, it's this candle here, because this candle housed these two candles. This could be current interval only. This house, this. Yeah, we can. If we close above this, then this is the target. Just reading this delivery. We accumulated, pushed up, stop hunt, came back down, took this high, retraced, took this low, retraced. This is bearish still because we're closing below lows. We just closed above this high. But I'll watch this and I'll watch 50% of this candle, which I don't know what this yellow line is, honestly. Damn, let's take it. I think this is what we closed above. Yeah. It lines up with EQ too. We have liquidity here, which I wouldn't want to see any close above here from the daily perspective. Looks like here too we got us a new day opening gap from a long time ago. So that's an inefficiency we can retrace to. Looking for outside liquidity at 21,337.75. Then I can look for sales. I'm not thinking one-sided week. Never that, really. I like how Monday's a large range day, but I prefer just to trade all the way to new week opening gap after we take a high. Buy some liquidity, taking a daily high. Monday's range is enough for this week's worth of trading, honestly. Let's go to H4. Yeah, I'm gonna keep that. Now that's kind of straightened up. Premium of last week. This is the old weekly range. Yeah, sticking to the same plan on the H4. Looking for a sale after a run on internal range liquidity. H1. $21,337.75. That's my target. Lots of lines there. I don't like a lot of lines, but I had to put those alerts. 21,337.75 is my target. Yeah, tomorrow's news. So news could kick it. We could run overnight. News could kick it, and then use Monday's range as our reference point, especially since it's a holiday. Alert set and buy side liquidity to start hunting sales, trading Monday, targeting new week opening gap. All right. That's that on that. Y'all have a good day. Peace.